Hey everyone, it's Nick Jerusalem with the Jerusalem's Happy Home team, and we're kind of midway through the year here, and so we thought it might be a good idea to just take a moment and do sort of a 2019 halftime report, if you will, for the greater kind of Seattle Puget Sound real estate market. So starting off, kind of what we're looking at here is the supply and demand trends over the last 5 years in King County. So this blue line here represents our inventory levels, and then the red line here shows you what the pending sales are each month. And so this kind of just illustrates what are some of the trends historically, and is what our market is doing right now. Does that in line with historical trends? Is it different? So just trying to give you just a quick idea for context. So a couple things you can see that, historically our inventory always peaks kind of right in the summertime. So between July and September, which we're on that same trend. Also, you see kind of from May to June is often where the rate of sales will start to dip off a little bit. And we are seeing that again here as well. Kind of illustrated a different way is the absorption levels of inventory. So it's, not to get too technical, but just kind of think of it as the absorption of inventory is effectively the rate of sales. And so you can see right now we're at 66%. The main thing though is to note that we're kind of following this similar trend where you can see the market historically will peak kind of in spring, right around March, April. And then inventory continues to grow. Demand starts to wane a little bit, and so that is what you see causing the rate of sales to drop through the summertime. So what is the market specifically doing right now? Well, in King County, your average sales price is currently $735,000. That's up 3% from a year ago. The median price is kind of similar, $612, and up about 2% from a year ago, although it did dip from May to June just very slightly. Pierce County, however, tells a very, very different story. So if we look here, dropping down to Pierce, we can see that their median price is up actually 9.2%, and their average price is also up 9% at $378. And so a big part of that is their supply is still declining. If we look at the number of homes for sale, we can see that they have 3,000 homes on the market in Pierce County, which is a decline of 1%. And you saw the average price was under 400,000. So good affordability still, low supply, and so therefore their demand is doing really well. When you compare that with King County, if we look kind of also at what the number of homes for sale, we can see that it's up 61% from a year ago. So we have a drastic increase in supply and flattening out of pricing. Days on market. So right now you're seeing average time on market is about 31 days. It is kind of steadily increasing, just again, as supply continues to grow and demand gets a little bit tighter. And then this here, percent of list price that homes are selling for is very interesting as well. So right now it's the average is 99.7%, meaning that homes on average are getting 99.7% of their list price, which is very, very good. Historically, that's down 3% from where it was in June of last year when homes on average were selling for 103.1%. So what I like to look at from this is not an indication of where home values are going, but more importantly, what is the psychology of the market right now? Because when things are on average going over asking price, buyers are expecting to waive contingencies going over full price. Whereas when you get to homes back to selling kind of close to full price and about a month on market, you're seeing that it gives people a little bit more breathing time. It's less of that frenetic pace that we had in the past. Mortgage rates right now are a big driver of what's kind of keeping the market chugging along because they're currently at 3.75%. They were as high as almost 5% just back in November of 2018. So the fact that they're under 4% is close to about levels of where they were in 4 years ago. So that's really helped the affordability keep going. So that's kind of what brought things to where they are right now. Looking ahead, what are some of the trends? We're going to probably see 2018 was definitely a market of adjustments, both emotional and just kind of we've seen it had appreciated so much so fast. So there was a lot of recoil in that in the high-priced areas. Those ones saw the greatest cooling effect, whereas the outlying areas in the suburbs, for instance, actually continue to see prices rise, as evidenced, with Pierce County, for instance. We're still seeing strong demand. Over half of our listings that we've sold so far this year have been multiple offer situations. Only one of those came in the city of Seattle, however. A bulk of that was in the outlying areas. Again, the affordability being kind of a driving factor. But this is a trend we're seeing nationwide, too. This is a nationwide periodical also similarly pointing out that suburbs are kind of trending, and that's a lot of generational differences. You have the millennials, the 25 to 39-year-olds that are now starting to getting to higher incomes, maybe they're starting families, things like that, and so they're buying homes and maybe moving to where there is more affordability. So I think that's a trend you're going to continue to see. Locally, job growth is still very, very strong, so that's where the demand is kind of still being well supported. But we'll keep an eye on our crystal ball to see where things progress from here. This market really, what it's created is an ideal opportunity, though, for move-up buyers, because homes under 500,000 have the strongest demand right now. And so you're seeing a lot of people who are able to sell a home and move up, and it's a really good opportunity to do that because the home you're selling is probably going to have very, very strong demand. The home you want to buy is going to be less competitive. And then with rates being, as we were showing you here, in this 3.75% area, it allows you to really get great affordability to lock in a long-term rate at historically low levels when you're making that move up to the next home. So if you have any questions about what this market means for you specifically, feel free to call, text, visit us online at happyhometeam.com.